Let's establish some context here so that everybody understands the root of this dispute. It's a refinancing deal that Blackstone did for Hovnanian, the home builder. The deal hinges on an engineered default by Hovnanian, let's call it that. And as the buyers of credit default swaps, Blackstone will profit in the event of a default should it be ruled a credit event. And as the sellers, Solus would lose. Have I got that right?
That's correct.
I was surprised, candidly, when Blackstone's Bennett Goodman answered my questions about this dispute on Bloomberg Television a few weeks ago. I'm even more surprised that you're here. Why are you here?
Well, I think it's more about educating the market on what's at stake. The current structure is somewhat incomplete as to guidelines on what market participants can and can't do. There's a narrative that there's a loophole here. We don't think that there's a loophole at all.
A loophole that presumably Blackstone's GSO exploited.
Correct. Is trying to exploit, and that provision of the ISDA is basically intended so that a buyer of bonds and a buyer of protection can assert the default on their bonds and then collect on their default protection. It's not to conspire with a company to create a default.
Blackstone has been described, or this trade, let's say, has been described as genius, brilliant. Other accolades, how would you describe Blackstone's behavior?
Well, I think it's unethical, but you do need a willing conspirator with a company to do this. But
it's a conspiracy.
It feels like that. I think you have an exchange offer that's intended to, which you referred to as refinancing, an exchange offer that's intended to create a deliverable that out of the gate would only be worth, say, 50 cents on a dollar.
It's getting a little arcane, and for those who don't understand, the deliverable is a bond that would be delivered at an auction overseen by ISDA.
Correct.
If the default is called a credit event.
Correct.
You went to court seeking an injunction against the refinancing, the exchange offer, and you lost that round. What happens now?
So we're now, we modified our complaint. We are suing them for market manipulation, fraud, 10b-5, a bunch of other things.
And where does ISDA come in, the Swaps and Derivatives Association?
So ISDA, actually a market participant posed a question to ISDA whether or not this was legitimate. ISDA refused to answer it. Their position is that they don't respond to bilateral disputes. But I think ISDA will really need to...
But the Determinations Committee has to make a decision as to whether this is a credit event.
That will come, when someone poses the credit event. So there's an interest payment due March 1st.
May 1st.
I'm sorry, May 1st. There's a provision in the exchange offer that demands the company not make the interest payment on certain bonds the company owns.
So you could win if it's not ruled a credit event?
Yes.
You could win if certain bonds aren't allowed to be deliverable? You could win if ISDA decides the price at which those bonds are deliverable? What if you lose? How much does it cost you?
Well, the mark-to-market has already been pretty significant here.
We're talking about how many millions of dollars?
The move in the CDS is now out to about 37 points. So could it trade down a little bit more? Yes, but the bulk of the move really kind of was taken in 2017.
But if it all plays out according to the marks, that would cost Solus how much money?
Nothing right now.
Nothing?
No.
So why fight?
Well, number one, there's no limit to what a company could create here. You saw that there was another exchange
on Friday
that was posed by the company, which we don't know the results of. But they're now creating a 2047 maturity bond because the first go-around, the 2040 bond wasn't long enough. And it's a 3% bond. So theoretically, that would even be a lower deliverable price.
So if you don't stand to lose anything, have I got that straight?
Well, if the CDS clears below the current market, we could lose some more money.
Okay, but you are fully hedged, I take it, at current market price? I see. So you have already tried to limit your downside.
We've already taken it, so to speak.
You've already taken it. Is there no way for you, and perhaps Goldman, which has been in the ring with you on this dispute, the higher the price of those cheapest to deliver bonds, the less you stand to lose, correct?
That's correct.
So aren't you incentivized to try and raise those prices going into the auction?
Yes, we could do that.
Have you planned to do that?
We're discussing lots of different options. That would be one of the ways to have the CDS clear at a higher price. So, for example, if those bonds were trading at par, then the CDS would clear at par. And then
what would it take for you to drive those bonds to par?
Probably to buy them.
How much money would it cost?
A few $100 million.
Is it worth it for you to do that?
It might be, yes. That's one of the things.
If you
we're
don't
looking
want to
at.
gamble on the determinations committee,
Correct.
that's another way of
Well,
hedging the downside.
I think we'll know what the determinations committee has decided prior to that happening, because the auction would take place 30 days after.
How determined are you to screw GSO?
Well, it's not about screwing, it's just about righting what I think is a wrong.
Okay. Why bother trying to save this market at all, right? The single name CDS market is a shadow of its former self. People argue that it doesn't deliver any economic value to the average investor at all.
The average investor is not involved, but you have and we're not trying to champion CDS. We're actually not as significant, other than a subprime short that we put on years ago. We have not really been involved in the CDS market to any great extent. But we have lost money. We could lose more money here. We could also make a lot of money here. So this is a market that we want to be able to participate in. But I think the companies, who, for example, that if you have an interest rate swap, a bank gives you an interest rate swap, that bank may buy default protection in order to protect or mitigate that risk. And that needs to function here.
Two quick things, Chris. Is it fair to paint Blackstone as a conspirator or a villain when Hovnanian, as you know, testified in court that Solus also was offering below market financing as recently as late December?
Well, the villain aspect, I don't think has anything to do with the financing. We had offered the company, we didn't really think it was below market. It was really on the cusp. They asked us to go lower in terms of pricing. We wouldn't.
Okay, and one last thing.
Yes.
Bennett told me it would be fine if ISDA changed the CDS rules to make engineered credit events like this and like Codair and iHeart impossible going forward. Would that fix the problem?
No, there's over 10 trillion of outstanding CDS that would be suffering under the same consequences. And if ISDA doesn't make a clarification to the existing language, then it's game on for any company or any market participant to continue to do this.